GameStop is a $30 plus stock. Today we're going to cover GameStop one more time, guys. I know a lot of you have been asking in the comment sections where Zed Monopoly is, why hasn't he posted? Well, I've been busy, guys. I've been busy, living my life. My position is still active. 17,500 shares in GameStop at $26.30, right? A lot of people wondered, am I holding this? Am I closing this? Am I losing on this? Like I said, guys, this is one of those trades that I'm making public for everybody to judge. But one thing for me is I'm holding on to this position till it hits my targets, of course. I will not close this above or below $26. It's just not happening. As a matter of fact, even $30. And I'm going to tell you why GameStop is undervalued in this video and why July is the month to see $30 plus. Pay attention, smash that like button. Okay, so GameStop, we know it has $4 billion in cash and a market cap of $10 billion. That's 40% of the market cap in cash, okay? If we compare this to majority of stocks, you will not see that for majority of stocks. Okay, so that's why it's undervalued at the current price it's at, $24.79, which is what it closed at on Friday. Now, July, a new candle is going to open, a monthly candle. And everything is set up for a rally to the upside. But let's just talk about the fundamentals for now. And I'm going to compare GameStop to something else. But let's just go to GameStop's figure, okay? The figures. If we look at market cap, like I said, is 10.5 billion. And PE ratio 300, that's fine, right? We're not looking at PE ratios here. This stock is different. Price book 8, okay, that's no problem. Tesla is 17 or 20. So we don't look at figures like this for now. However, what I'm focused on is this: profitability, profit margin, all right? Just under a percentage. Operating margin, -5. In a growth stocks, this is the best you can get in a growth stock, right? A growth stock is a stock that's coming out of a hole. So this is the best you can get in a stock like this that's undervalued, and it's undervalued because investors are not buying it because they don't believe in the future of it, right? So just look at these figures for now. Return on assets under a percentage, return on equity over 2%. That's great. Revenue 4.9 billion. Okay, gross profit. Now we know the gross profit isn't great, but 2023 they made their first profit, 16 million, I believe, in 2023. I think I said 2028. 2023 first profit. Earning per share 8 cents. Okay, the total cash, of course, has changed. It's now 4 billion point something. And the total debt, I think most people are saying they don't have debt, right? This is just long-term debt. So this is great. An operating cash flow is 200 million or so. That's great. Okay, no problem. Now, let's compare it to Snowflake, which is valued at $135. And it has a market cap of 45 billion. That's 4 times as GameStop. Now, let's go here. Price book 9, price to sales 14, forward PE 250. Again, similar to GameStop in a way, only by 50 thing, but market cap 45 billion. Here's the thing: profitability, profit margin $30 or minus 30%. Operating margin minus 42%. Do you know how long it's going to take for Snowflake to become actually profitable? But it's still valued 4 times as GameStop. Now revenue, same as GameStop. Okay, total cash, same as GameStop. Actually, GameStop now has more than Snowflake. The float, just in case people say, well, the float, the shares are different. The float is 300 million. GameStop, I think, is now at just 380 million or 400 million, but it's still at least half of this is what GameStop should be worth at this current valuation, or what if we compare it to this. But this is the thing: investors are piling money onto these stocks because they think they're going to do well in the future. They think they're going to do well in the future, and that's what makes these valuations so high, and that's why investors buy crappy stocks like this that are beat down. Okay, and this is in the tech cloud sector, so they believe this is something that's, you could say, is safe. So anyways, that's just something. Well, but again, institutions, it's what's given that the base, this solid support. Something that GameStop doesn't have, institutional backings or institutional ownerships, and it will come. Okay, but it doesn't have to, because institutions sell to retailers. But if retailers now holding on to GameStop, they're the ones who are going to be selling to institutions. So this is all I'm saying is GameStop is undervalued, guys. Okay, now let's just look at GameStop and its chart. So I just want to show you the chart for July. And we spent the last month, guys, just, I guess, stabilizing and forming a structure. So just give me a second and we'll go through the chart. Okay guys, so let's look at the July chart. So we closed June by setting up a base, something that we can hold on to going forward. And I think for most people that don't understand charts, maybe they don't understand what they're looking at. So basically this here, this is something that we call support. Okay, we have a body right here at 24.70 or 69 where we closed. So going forward, we will use that body as support, just like we used this body right here. You can see, and when you see there was a dip, okay, it was right around this area, okay, which is the body of this candle. So going forward, we will use this body of this candle as our support, which means the next push up is going to be something like this, okay, which could represent something like this. And if you're lucky, you get this big wick. But for now, what makes sense is to see something like this. Okay, now most people will use this as resistance, but this setup, if you've seen it enough, you know this cannot be used as resistance. And I've seen such setups before where this doesn't happen to be resistance. We'll just do this, and maybe you get a correction a little bit, a nice dip back down. Okay, to test one of these candles that will form as a base, and then you get another like this. Okay, now this is the bullish case scenario. The bearish case scenario, I don't see it. I can't see it, because what I'm using here is, let me see the time frame, or if we go to candles, well, I'm using 5 years, so let's use the 1 month for now. But then if I use the 1 month, this can't be the 1 month. Oh, there we go. Interval, we have to use 1 week. Okay, so there it goes. So I can't see a bearish case scenario, guys. I mean, the bearish case would be you come down to this level, which is this wick. But then what's the point of opening up this candle? But if you come to this wick, which is this, so that means you will have something like this, and then you get a huge recovery back up, as I said in the previous video. But what makes sense is just to continue this way. Okay, and this is something you'll see. Now, of course, this is just the bullish case scenario, but it doesn't make a difference even if you get a drop this way. It still becomes undervalued after what I just said in the first half of this video. But then you still will have this recovery to $40. And if we cover this area of $20, now remember, I'll probably be in an unrealized loss. I'm okay with that. I believe in the final outcome. This is what you have to do, is believe in the final outcome. If I was to compare this stock to a lot of these growth stocks, like I just did in Snowflake, this is the better option, guys. This is undervalued, only 10 billion market cap. The turnaround story is going to be huge. It's in the gaming industry, and they're already pulling in 4 billion in revenue. All they have to do is adjust. Maybe they pull in 3 billion in revenue and they turn even more profits. I mean, it's working. The plan is working, guys. 2023, I seen the first of it after they turned a profit. And now they have 4 billion in cash. So now they're making a profit and more cash to go on the offensive, like I said in the previous video. So it's all great in my opinion, but this is all I wanted to share with you guys. Don't expect anything. Put your limit orders in wherever you want to sell, and it will come, right? Your limit orders can be within this range, or if you really want to go aggressive, within this range. I mean, there is no right or wrong answer. Can it short term turn red? Yeah, but look at the risk to reward ratio now. You have all this area versus this area. It's worth it. It's worth the risk. It's worth being in a little bit of unrealized loss to get the big chunks of money. Okay? Peace and love as always. Spread this video to people out there. Share it. I'll see you on Instagram. If you want more updates, look in the description. I'll leave the Patreon where I post articles. And if I don't post often here, I will post it there, guys. I will post updates there. Always do in regards to my trades. Peace and love as always. Bye.